Morning all, how are we doing? Morning Forex. Mom, Trevor, Umani, Sammy, Ember, Jane, morning. Flo, if you're in here, let me know. Gonna have a quick look at trend lines and channels. Bear with me one sec. Right. Okay. So yeah, yesterday wasn't here. Was running around a theme park on roller coasters, which was awesome. But yeah, I was doing some trading from my mobile. You can't trade on a mobile. I keep saying over and over again. Yesterday I took quite a few trades on the mobile. Quite good. Made quite a few losses because I couldn't actually do any analysis, but I was just doing aggressive drawdown control, so it didn't really matter, the analysis. I was just looking to get in when the market was weakening. So, but I'll have a look at all the trades. Banked 1.4 yesterday, just under. Previous day, just over 1%. That was the last day of last month. So I'll run through quickly what happened yesterday. I'm sitting in 6% at the minute. With some aggressive positions on everything basically at the moment. The market's squeezing quite hard at the moment, so just looking to balance the books a little bit. So yesterday, just show you quickly everything I closed out yesterday. Where are we? The first. So the US dollar Swiss. So 3 US dollar Swiss positions. Which were here. Let's drop down to 15. So basically was that one there, that one there, and that one there. So took an aggressive one in the morning, which I closed out as we hit this low. And then I put trailing stop on another position I had on there and another position I'd taken there on the drop. So I took one there and one there. You can see these 245s here, aggressive positions. So that's the one that worked and banked the profit. That one and that one I had trailing on. So this one was taken with the EA. This one here, I think it was. No, that one there was taken with the EA. So basically I put trailers on them. It was either going to break these lows and go for it yesterday or it wasn't, and it didn't. So I didn't want to get stuck in drawdown on 2 extra positions. So they basically closed out pretty much net. And then as we pushed up yesterday, I was watching this in between getting on Cyclone and another ride. And I kept basically, well, you know when you go to theme parks, you spend literally 40 minutes queuing on everything. So it's really good because you can just sit there with your MT4 on your mobile and just see what's happening in the market. So I kept checking it every couple of hours, every hour or so. So we saw this big push up. I'm not sure if this was an ADR yesterday. Did we get an ADR? Yeah, we did. Yeah. So we had an ADR hit yesterday. We screamed up. So I put on a larger position up here at 0.5, aggressive position, which turns nicely. I think that was, obviously I didn't have the indicator on my chart, so yeah, it was this pattern here. So we pushed, pulled back. So I was looking for a retest M pattern there, which is exactly what we got. The reverse of it didn't happen until down there. I got in up there with an aggressive one, which is just sitting there at the minute. So that's US dollar Swiss. Euro CAD, I closed out. Oh, there's another one there, sorry. Yeah, there's another aggressive position there that didn't work out, which was up here. So as we took this massive push up, I was watching this push up and then it started to pull back. So I was looking for that to be a liquidity run of there. It wasn't. So I got stopped out on that one. Oil, I tried an aggressive position down here on this double bottom, didn't work out, stopped out, pushed back down again, got another aggressive position on towards the end of yesterday, sort of around here somewhere, which is now in profit at the moment, but I've got a break-even stop on that. Let's put my average way below ADR. Just looking for an ADR push on oil to get out, basically. And EuroCAD. So EuroCAD, Flo, are you in here? Don't know if you're in here. Sammy, UJ nuked me. Currently doing aggressive DD on it. Non-farm can be good. Yeah, we'll have a look at non-farm in a minute. Morning Neo, morning Evil. So EuroCAD. I'll show you why these trend lines are on here in a minute. EuroCAD was closed out completely. 1, 2, 3. One, two, oh yeah, 3. So that one there, that one there, and that one there. So these are just older positions. That one's from Tuesday, that one's from Wednesday, that one's from Thursday. So we've had this lovely stepping market structure move on the euro that's been happening. So I've been scaling into that. Dropped beautifully yesterday. I got out of that one there as we got down to there. And then these two I got out of down here at the low, which is where I was expecting to get some kind of reaction, which it did. So I'm flat on EuroCAD. I've taken the EA off EuroCAD, so EuroCAD's just played out, done, dusted, and closed. So that was yesterday on that one. This reason for these trend lines on here, somebody posted, Flo posted yesterday in the group, or I think it was yesterday. To be honest, I got back yesterday. There was over 200 messages in the Telegram group. I did skim read them. I didn't read them. I replied to anything that was tagged with me in it. Other than that, I didn't go through everything. So apologies if I haven't answered any questions because you haven't tagged me on it. But I couldn't be bothered to read 200 messages after I'd done 15,000 steps around a theme park yesterday. So if there's anything I missed, tell me again. But somebody posted a chart with a channel. And I just wanted to... I don't have a problem with channels and trend lines. People use them all the time. The problem I have with them is that they are never going to be the same for everybody. Okay, so this was EuroCAD was the chart. This is how I personally would have drawn a trend line yesterday, or in the lead up to yesterday, for EuroCAD. Okay, so it's that point there, that point there, that point there, and that point there. That's how I'd have drawn my trend line. So you can see we hit my trend line there and just kind of went through it and tapped into it now, so it should drop. I would have also drawn a trend line like that earlier in the week, and it would have broken and retested it perfectly. Yeah, and then it came back and stopped there again. Yeah. So that's how I would have drawn them. But someone else drew them completely differently. Just trying to see how it was drawn. It was drawn from there. So like that. And like that. Yeah. So joining kind of this point and that point and that point and that point. And this is my problem with trend lines and channels. You give 10 people a chart and tell them to draw a couple of trend lines and channels on it. You won't get the same thing. So how can they be respected? The problem you will find is that they will always be respected. There is, if you give me a chart, any chart, I will be able to draw a trend line on it that is perfectly respected. And you'd have got in there, you'd have had an amazing trade. Because once you see something in hindsight, you can always see a pattern on it. But hard right edge, what you do at exactly that point, which would have been a buy in this case, didn't work out. This is why I have not a problem with them. I tried to trade trend lines and channels and harmonic patterns for years. They fail as much as they work. But the problem is, as with anything, you can never hold the ones that work long enough to actually make a profit on the ones that don't work. So this really is what I would have had drawn on that. Yeah. And the problem is, by the time you identify them, they're ready to fail because the harmonic pattern's already played out. So therefore, you're at a failure point usually, and that one doesn't work. And you know, they're just, I don't know, just can't make them use. But anyway, I just wanted to just show, you know, it is a very subjective thing. The way to use these, if you want to use them, is when you see 2 points clearly defined, and at this, let's say it was here. Let's tell you what we're doing. Right. So let's say you're waking up on Wednesday morning. What you would have done is that, isn't it? You'd have done exactly that. Yeah. So you'd have seen that one, and you'd have seen, this is another annoying thing about trend lines, they're just annoying. You'd have done that, and you'd have done that. Right. And then scrolling forward, you'd have sold there. And got stopped out. It would have kept pushing up, and then it would come down and hit the old bottom trend line. You'd have bought there, and you'd still be in this trade down here. See, in hindsight, I drew my channel like that. That worked out beautifully. But that is not how I would have seen it when it happened, which is why trend lines don't work, because you are literally drawing a pattern on something that's happened. It's not working now, is it? This is the issue. It's you know, I don't have a problem with them per se. I just find them you know, I went through a course about trend lines and harmonic patterns. I've been through a few actually, and I've done loads of research obviously on the web, as everybody has. And there was a group I joined which was channel trading, a channel trading group, and I just saw everybody in there painting their channels in the same way and then adjusting them in the same way, and everybody was doing exactly the same thing and losing exactly the same at exactly the same time. Morning and earlier, yeah. You know, so anyway, I just wanted to point that out. I don't have a problem with them, use them, but just they are very rough areas, yeah. And to be honest, when you get to a point on a trend line, normally that's happened. Why not just use the RSI? It's so much easier to read, and you haven't got to draw anything. Everybody sees exactly the same thing. There's nobody in the world seeing a different one of those to you. These things, everybody's doing differently. So use something that the world's using. Moving averages. Oscillators. Morning, Stevie. Right, so let's have a quick look at, so that was yesterday, oh sorry, and a quick look at the funded account. What the hell's the day? Wednesday, banked 0.37%. Wednesday, I made a right cock up. I thought, on Wednesday, I thought, maybe I'll do a little bit of scalping. So I started to scalp the Dow on Wednesday. Yeah, using the Price Action Toolkit. First trade I took, 83 lots. I had this set to candle high instead of last candle high, and it had just started pulling back. So I entered, and I had my stop there, and it entered 83 lots. Needless to say, that trade didn't work. But thank God I managed to spot it. I closed it as fast as I possibly could, but it hit the stop. So yeah, that didn't start well. Then I started to trade. I thought I better get that back, so I took some normal trades. Next one lost, of course, because stops get hit, and that's what they're there for. Then I got a winner. Then I got a couple of losers, and this went on for a bit. Then I had a winner and a winner and a winner, and then another winner and another loss there. And I thought, screw it, I'm stopping. So basically, I lost a little bit on Thursday trying to scalp. And I thought, after the first couple of trades, I thought I shouldn't be doing this because this is meant to be showing that you can run the EA on a funded account. But anyway, so that was a cock up. So I managed to pull out the day at 0.8, scratched it basically. 0.48 next day, that was yesterday. So yesterday on the 1st, I closed out One of those again. Why is that closed out there? Was that a scalp? I think that's one I must have put on and left. Anyway, ignore that one. EuroCAD, closed that all out yesterday. Same sort of thing basically. So closed the lot yesterday on the drop. Missed half the profit. Never mind. Is that all of those? Oh yeah, sorry, there's 4 positions there on EuroCAD. 1, 2, 3, 4. Just taking another short. The EA is still running, looking for a pullback drop potentially. Pound New Zealand closed out on that one. There's that one there and that one there. Closed out there. Taking another position which is closed out this morning. And Swiss yen closed. Oh, sorry, that's this morning. Yeah, so sorry, this morning I've closed out a couple of Swiss yens. Flat on Swiss yen. So I closed out those this morning. Basically, we're just filling this gap ahead of this propulsion, this propulsion gap after this accumulation. So I decided to close those out manually this morning, the Swiss yens. It was about $250 profit, something like that, 230 or something. So I've closed those out this morning just because that gap's filled. I was just a bit cautious of a drop this morning, but it seems to be pushing still. So yeah, so 1.2% banked. Target on this is 5% because it's stage 2. Sitting in 1.5% drawdown. I've got some profit on the table at the moment across the board, but I'm going to leave that to run for a minute. So that's how the prop firm account is going. Right. ADR, I don't know what happened yesterday because I can't tell. You can't do anything on a mobile phone. You can see price action, but I can't see ADRs and things. So I've no idea what hit what yesterday. But obviously yesterday was the retracement move on a lot of these big moves that we've had. The euro did a lovely retracement yesterday. So we've had this big multi-day squeeze. Profit move started yesterday. Potentially, we could see a continuation of that today. We'll see what happens. We've got a couple of EuroCAD, for example. We've got a couple of potential propulsion moves. That's not really a propulsion gap because there wasn't an accumulation ahead of it. It was an A shape. But we could see selling continue from these areas if this is going to be a peak formation high, and we're going to now start a little bit of a pullback ahead of the rate announcement next week. So we'll see what happens with the euro today. We should get a good idea in the next couple of hours as London is open. News obviously today is non-farm payroll, 1:30. I'm going to come on and do another stream at 1:30, and we'll just watch it. Might try and scalp a bit on it, but yeah, 1:30 non-farm payroll. So be aware of that. Yesterday we had positive PMIs and positive Swiss franc, although the Swiss franc did have a lovely move on the news. It did retrace as well. So that didn't do an awful lot. We'll see what happens today. We might get a continuation move on the Swisses today. We'll see. So yeah, so non-farm payroll today. I'll be back on. I'll come back on about 1:20. And we'll watch that because I'm around this afternoon. Overnight news, China. The latest Iran response on nuclear deal is not constructive. Japan. Purchase. Considers a price cap to reduce electricity prices. Okay. We had Brent futures settling yesterday. That would explain yesterday's oil movement. So did you hear a scream in the background then? I think we might have just had a spider capturing event. That's my wife. That's the noise that happens when spiders get captured. Well, killed, actually. Okay, so I was just looking for oil news. So basically, at the moment, obviously, oil is dropping dramatically, and yesterday was another big sell-off. We are pushing up this morning so far. So I'll start off with oil. We'll have a look at the ADRs and everything in a minute. If there's anything specific you want me to look at, let me know. I am going to do a full rundown of all the charts this morning anyway. But I'll go in reverse order today because I know that somebody wants to have a look at US dollar yen. So we'll go backwards. So oil, obviously, as you know, we are at the pre-Ukraine levels at the minute, which is down here. So this is where Ukraine kicked off, and this is where we were before that movement to the upside. So we are back at these levels again. Now, this 85 a barrel is where we seem to be sitting and bouncing around most of the time down here. So this level here, let me just draw it back in because it's drawn in before, but I've cleared the decks. So it's this this high basically, which we came and used as resistance, and then we broke through. We didn't come back and retest this level, we just went, which was indicative of strong oil pricing. We just flew through the breakout and went. We've come back and we've tapped into that twice now. We've just had our third tap on the area yesterday. So yesterday's reach down was down into that area, 86.4. Obviously, it's an area. Everything is an area. Nothing is ever a level, specific level. You know, you can draw a line on a chart, but it is just a line on a chart. Price doesn't hit to the pip. It does sometimes, but most of the time it will hit an area around a resistance or a support, which is a zone. So we're constantly coming down and we're retesting this area. We've gapped up off of it this morning quite strongly. So I'm hoping that this is going to be the low. Although there is a real temptation, I would expect the market to come down and retest this area and take this liquidity. Anybody that's longed here, institution wise, over the last couple of weeks is going to have liquidity sitting there, as I have, with my aggressive position. So I wouldn't be surprised if we came down and tested 85 today. So the actual 85 level is there. So that is your actual 85. So this area here is of interest. We've got a big round number, significant number for barrel, and we've got recent support where there's going to be liquidity sitting. So one or two things I can see playing out today is an ADR hit to the downside, or roughly an ADR hit to the downside, or this liquidity here has been run, taken, and they're happy and they're going. I don't know, it's very difficult. I was looking for some fundamentals basically to prop up the drop in oil prices, and I can't see anything. Everything seems to be bullish on oil, yet we seem to be continuously getting this mixed message from the market at the moment. So and this is the problem with every trade, is timing. Oil is going up. There is, I mean, unless the world does something about what's happening with prices, oil is going to go up. It's just a timing thing. When is it going to go up? We know it's going up at some point, and it's a case of when you're position trading and scaling into something that you have a strong belief in direction and bias on, it's not scaling in too hard and fast that you can't sustain the position. And because what happens, and happens all the time, is you get to that point where you go, nah, I'm breaking on it. I'm going to take half of that off, half of that off, half of that off, and I'm going to take that one and that one. And then literally the next day you get an ADR hit to the upside. It always, always, always happens, because what you're doing is you're in a squeeze, and the market knows you're in a squeeze, and it knows there's a certain point where everybody's going to puke. And they just need to get you to that point where everybody starts to puke. When you're puking, you're buying. You're getting out, you're selling rather, you're getting out the opposite direction. You're fueling all the buyers that then propel the market higher. It's just the way the market works. It's the supply and the demand. So one or two things is going to happen. We've either hit that peak formation there and we're going, or we're going to come down, I think, and test 85 today. Either way, likelihood today is going to be that, because it's non-farm at 130. It's unusual to get big market movement ahead of non-farm payroll because the market is waiting. No one's putting a load of exposure and risk on the table ahead of non-farm payroll. They're waiting for non-farm payroll to hoover up everybody's orders and take it from there. So I don't think we're going to get a massive amount of movement. Although oil, this is the first oil I've traded through non-farm because I don't normally trade oil. So I don't know, oil may not be affected by that. We'll see. So yeah, that's the analysis on oil. I'm looking for the 85. 85 to 86 is a key level. I've got another buy limit here. Aggressive again with a stop in exactly the same place. So this one, the stop was down there. I've now put that one to break even in case we drop. This one has the stop just down there, so it's not a high risk trade, but I'm looking for a double bottom hit to get a limit order on aggressively. Hopefully I don't need it. Hopefully we're just going to push. What did I just do there? Stick out there somewhere, it's TP. So yeah, good. So H4 nicely extended at a level of confluence support. So yeah, really nice area to start getting in aggressive if you need to get there. ADRs, we've got one this morning. We've got pound New Zealand, which is hit ADR. I'll be surprised if that is an ADR. That's probably broker manipulation. Let's have a look. Yeah, that's not an ADR. New Zealand dollar, you never know with New Zealand dollar. Let's have a look at the pound New Zealand on. Oops. Yeah, now that is priced in. So this is actual price action. It's the same on both brokers, so it's not manipulation. So yeah, that is an ADR hit. Although I've got a different ADR figure. Yeah, no, that's a lot bigger. A lot bigger. Liquidity is different, completely different. So I'd be, if you took that as an ADR, well done. If you didn't, obviously it hasn't it. So that's all we got today on ADRs at the moment. We will probably get a lot more later for non-farm. The RSIs are very quiet at the moment. We've got pound US on the 4 hour, sorry. Very, very extended and embedded down here. We've got a nice W potentially forming down here. It's the wrong way for me. I want to be short on this. So again, it's a counter trend one. We'll look at US dollar yen in a minute as well. For those that are in US dollar yen short, you know, you've taken a counter trend RSI extension, so it's dangerous. But this is why I don't like taking them, because you could just accumulate, RSI pulls back, and then you start next leg. The pound is massively weak at the moment, so quite often we'll get the bounce, but the bounce is tiny. The profit take is small because we get a load of people adding into positions. So looking for that sort of movement potentially. So I'm not interested in that one as a long. I'm much more be interested in as a short. US dollar yen is extended on the 4 hour and the hourly. Only just extended on the hourly, or was rather. It's starting to come down now by the looks of things. Yeah, I've got divergence there. So nice bearish setup. As to where it's coming down to, very difficult. We got that move there, which could form support, and then we've got this one here. But it's non-farm payroll, so it could just go like that, and then like that, and then come back. No idea. Non-farm payroll. Flip a coin. But we have broken this high. We had a little bit of a 3-bar reversal there, which didn't hold, and it pushed back above. So this, to me, doesn't look like a false breakout. If it's a stop run, it should be half an ADR at least. We are 100 pips on a 61 So we're almost an ADR above. So this is a breakout. So I'll be looking for a continuation on that, really. So that is extended, and we'll start obviously the analysis. Let's do US dollar yen now, and then I'll come back and do the indices in a second. But yeah, that's a breakout. We are very, very extended. You know, this has never been a short. If you've shorted this has never been a short. You know, it's a massive, massive, massive uptrend. The yen has been weak for a long time. The US dollar has been strong to currently kind of neutral for a long time. There has never been a reason to short this. Yes, you can take any extension, obviously, and there's a good chance of getting some kind of pullback on it. But when you're in a strong trend, these pullbacks quite often are just not enough, because you've got so much buying power keeping this trend going. So every time the market starts to pull back, you'll get buyers stepping in and adding to their positions. You'll get the occasional one where we had good news coming out of the yen and we get that drop. But this is where I bought. Remember, look at the Swiss. This is where I bought the Swiss yen. You know, you buy, don't get in all of them, but I took the Swissy here as a long and out. I didn't short the highs because it's just a massive, massive long. So I don't really know how to help with the US dollar yen, but getting aggressive when you see any signs of, like now, getting aggressive right now. Entry there, nice big one. Stop there. There's a chance you get stopped out. If you don't, brilliant. But you can use non-farm payroll for aggressive positions. And non-farm payroll and big news events, all big news events, are good for aggressive drawdown control because you're going to get in and out within 10 or 15 minutes. Completely undo. So if you're sitting in, you know, 8-10% of drawdown or something, and you need to make an impact. US dollar Swiss, for example, I've got a nice short on that at the moment. If I want to, let's say with non-farm payroll is just about to come out, stick an aggressive position down here. And if non-farm payroll tanks it, you're done. If non-farm payroll flies, doesn't matter. And if non-farm payroll flies, stick an aggressive here and assume that they're going to do a liquidity run and it's going to come down. You get your aggressive position in there, and then when they return to origin, which they often do on non-farm payroll, that's your aggressive move. That's where you make your money. So in US dollar yen's case, we need to see where you are at non-farm, but you just have to stick that order, that big sell order, underneath there, and I'd give it a distance. I mean, what I would do if this was an aggressive position and non-farm was coming out in 10 minutes, for example, I'd have an aggressive position there with a stop there, and I'd have an aggressive position there with a stop there. Yeah, so I'm looking for a break of that low. I'm looking for a break of the current low. Basically looking for it to tank. Where am I looking for it to go to? I don't know. It's non-farm payroll. Could go to here, 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 or it could just go to there and then fly up to there and then come back to there. Not a clue. But what I do know is if non-farm is manipulated and if the US dollar is tanking on it, I've got an opportunity to completely get out of a position. Yes, if it goes wrong, it's going to cost. But that's what aggressive drawdown control is. It's just a normal trade. It's a stop loss trade. If you try to trade the news, sometimes it works, sometimes it doesn't. Yeah, but it's a good opportunity. And obviously it's very extended. Yeah, so you know we've had a lot of people buying, and if non-farm is used to manipulate short, you're going to get everybody here exiting their positions when you and I would be doing exactly the same. Yeah, so let's say for example I'm long on US dollar yen and non-farm payroll is just about to come out, and I've got, I don't know, 0.5%, 1% in profit. What am I going to do? I'm going to make sure that I don't lose it, and I'm going to put a pending order underneath, or I'm going to put a trailing stop rather underneath, so that if it flies for me, I'm going to absolutely make a fortune. If it goes against me, I'm out, and I'm going to bank some profit. It's a win-win situation. So you'll find a lot of people that are in profit on this move will be looking to exit the position if it goes against them. If that happens, everybody that's bought is going to become a seller. That selling is going to fuel that move down. People are going to see it move down. The news traders are going to get in short, and it's going to propel the move. Yeah. So there's your opportunity if you need to make a decent amount of money. You know, and your non-farm payroll candles, you know, looking at, you know, 200 ADR, 100 ADR is totally normal to get that sort of size candle on a non-farm. Just trying to find. Last non-farm I don't think was particularly interesting, but yeah. So there's your opportunity on the US dollar yen. But it is extended, you know, so it's likely we are going to start a pullback. You know, my US dollar Swiss that I'm in, I've got the aggressive positions on. I don't know what I'm going to do with these at the minute. Kind of want to hold oil, but there's a lot of money on the table. I'm going to hold it for the minute. But yeah, I mean, you just need to get out when you get out and do aggressive, when you're doing aggressive drawdown control, do drawdown control with it. Make sure you do some drawdown control. You know, you look at my US dollar Swiss, all this profit that I made on these drops, this is yesterday, but there's these ones here. These were aggressive positions, and look what I did. I took off loads down here. This is all loss taken off. So make sure you do the drawdown control. It's so tempting when you get an aggressive position that works, and it's like it gets you closer to your break even. It's so tempting just to go, oh well, it's on the way. It could well drop a little bit further. I won't bother doing any drawdown control on it at the moment. Let's see what happens, and then it just goes back up to there, and you're like, too late to do drawdown control now because it's going to cost all of that profit rather than half of that profit. So when you take it off, immediately go and do something with all these positions which are wrong. So that's US dollar yen. It is rolling over. It is very extended. So I think you've got a good chance of getting some kind of pullback now. You know, we're on what, 1, 2, 3, 4, 5. Day 5 up, 5 drop. It's due, but it could just do that. So just bear that in mind. Don't get greedy on it. If you're in it and you're wrong, get out. Don't get for. The thing. One of the things that I suffered with a long time when I started position trading was it's this mentality of the market owes me. The market's put me through this crap. It owes me. No, it doesn't owe you. Get out. You're wrong. Get out. That's what break-even's for. Get out. That's your emergency escape. Plane's going down. Both engines are on fire. You've got a parachute in the door. Use it. Don't think, oh, well, maybe the planes will extinguish the fires. They'll come back to life and I can land the thing. Just get out. Yeah. Live to fight another day. Right. So that's the US dollar yen. That's so indices. What happened to these yesterday? I wasn't watching. Bullish yesterday. So we've started our down move. The lows here have been tested 3 times. Next time we hit that, we're going for it hard, I reckon. So we are just obviously on our way. We've got the nice, again, looking at Mr. Trendline. Some may draw it like that. Some may draw it like that. Some may, that's pretty much the only way you could draw that one, to be fair. But either way, yeah, roughly around there, we got the move. So move started, nice market structure. So a couple of days of pullback, drop. So looking for that continuation drop. So yesterday we had a little bit of a profit take move. Got that gap to fill. Look, we're heading for the gap fill, which we missed yesterday. Oh, that's why I took that down yesterday on the on this account, by the way. Sorry, I've just remembered why I took that down. Remember I said this one here. It wasn't. Yeah, it's a DAX. Sorry, not a Dow. Look, I took that DAX yesterday for the gap fill. There. Look. So the gaps there, you can see when my TP was. So yesterday we pushed up, we pulled into that top, and I had a little gap fill play on, which was a 1-to-1 risk reward, which stopped out. So that was why I took that DAX. I was trying to remember why I took it. It was basically a gap play. So yeah, gap is still in play, obviously. So when we get up to the gap today, that might be where we get everything sorted and then start next leg down. As you can see, the market structure is very nice at the moment on the DAX. Looking for a pullback somewhere into here. I could go up to ADR. Obviously, as long as we don't really break this high above ADR anywhere. I've got one position on here already, so I'll happy to scale in a couple of times on the move up. Let's see. So that's the DAX. The US indices, I should imagine, did very much the same thing. Yeah, so we've got nice hammers. We've got gaps to fill still on those as well. That's done actually. Done the gap fill on the NASDAQ. So like them all short. Same thing. The trend line. There's very little ways you can draw it on this one, but that hit there. That is where I said, wasn't it? The 200. Looks like we're starting the next leg. We didn't. We came up and took all that liquidity out for a week and a bit, and then we started. So yeah, continuation shorts on all US indices until we get down to where we're headed, which is pre-COVID. So looking for that to continue. Obviously, the way the market is, the way the recessions are going, the way interest rates and inflation are going, there's no reason why this shouldn't continue. But we'll get a pullback before the next leg down, probably. How long that's going to be, don't know, but I'm happy to scale in and wait. And the Dow, same thing. The Dow, we got same pattern yesterday. So looking for some kind of move back up. Don't really want it much above ADR or a bit. So if you get up to ADR today, if you want to wait on the indices, wait to get up to ADR today. If we get there, that would be a lovely entry. If we don't get there, obviously, you won't get in. But yeah, it looks good. Right, so that's the indices done. Bitcoin, I imagine, is coming down. Yeah, coming down on Bitcoin. Not healthy. Right, so we've run through the rest of the pairs. What's happening? So you're up to this morning. So Euro New Zealand, we've got the reversal alert. So if that's peak formation high, we've just put in our lower high. So we should be looking for a break of these lows. Nice ADR hit on non-farm payroll, hopefully. We'll see what happens with that one today. So I'm just watching what I want to do with this US dollar Swiss. I want to see what is actually moving this, whether it's the Swiss franc or the US dollar. This looks like a little bit of Swiss franc strength. No, it's not. Hang on. I was going to say my chart hadn't updated. Look. Weird. Okay. I'm going to hold it, I think, for the minute, and just protect it. I've got a feeling today we're just going to play around the Asian range, which is there. It's there. Very tight Asian range today. I've got a feeling we're just going to play around the Asian range ahead of non-farm payroll. And I'd like to have this on at non-farm. I don't care if it gets taken out on non-farm, but I'd like to have it on non-farm, because if non-farm tanks the US dollar, I shall probably retire. But no, I'll make a decent amount of money today, so I'm just going to hold that position. My thought process at the moment is banking this and adding back on and just sticking another 1.3 in the bank and taking the drawdown up to about 6.5%, and then looking to add them on again on non-farm payroll. But I think I'd just rather hold them at the minute, just because it's non-farm payroll day. Because if we do get some kind of movement today, which is down here, I will take that off down there, do a little drawdown control again down the bottom, because I've also got these positions which will suddenly come into profit, and I'll be able to escape the whole thing with somewhere between 3 to 6% in profit in total. So I'm just mulling live, so sorry about that. Right, US dollar Swiss. So let's go backwards. US dollar Swiss, I'm in, obviously, long. That's really big, that RSI. Why is that so big? US dollar Swiss, obviously, it's pushing down at the moment. We've had this massive, big, strong push on it. I started getting into US dollar Swiss here, looking for Swiss franc strength. So I was looking for market structure to continue. It didn't. And that is exactly where the 72 and the 24, exactly where I was expecting to get the next leg started, or at least a pullback if we were going to continue long. We didn't. We went straight into an accumulation and a squeeze. So that's why I'm in it, dealing with it basically. So we haven't had a decent pullback on this yet. So I'm looking for a decent move down on the US dollar. I'm looking for powering up on the Swiss franc. The Swiss franc yesterday on the news started to power up, but that was it. That's all we got out of it. Not a lot at all. So we then had this big push up today. Now they've reached for liquidity and taken liquidity on a lot of the US at the minute. So it does bode well for potentially a reversal in non-farm, but we will see what happens. So just managing this one at the minute. I like it short at the moment because we're massively extended, but equally, we are not really getting any pullbacks. So we've got move, accumulation, move, accumulation, move. This here is a key level. We're either going to do this and then potentially have another leg, or it's going to collapse here. So we've had our 3 pushes, so we should get a drop. But you know, the market does what the market does. Non-farm payroll is not something that is a leading indicator. It's a reactionary indicator to monetary policy. So it's not something the market looks at and goes, oh, the non-farm figures are X, we need to change policy and go long on the US dollar or anything like that. It's basically, this has been caused by monetary policy. So it is a reactionary news event, which tends to be a spike and retracement, or a spike and retracement, or a whipsaw, stay where we are. But if they are in the position where they want to go in the opposite direction, they will use it as a move. And obviously that move can be in either direction. So you've got to be a little bit careful. Don't get too exposed on US dollar. But hopefully today we'll get that drop. US dollar CAD, same thing. We've had big pushes on the US dollar CAD. Canadian dollar's been weak off the back of oil, and it tends to move in line with the US dollar. So with non-farm, we don't often get a massive movement on US dollar CAD. But with the US dollar CAD at the moment, I'm kind of either or really on this one. So I'm happy to take it long or short, because I think the Canadian dollar is going to power up at some point, and obviously the US dollar moves and weakens all the time. So hence we get these nice big sort of moves and sweeps that goes on in this pair, because they're close trading partners and they tend to move a lot together. Fairly decent ADR on it as well, so it's a good pair to trade in both directions. I'm still not sure on the US dollar policy at the moment as to whether I should be long or short. It's a confusing one. The Fed keeps flipping, and I'm not sure which way I should be trading it. The Canadian dollar I still think is good. They're on top of inflation quite nicely. Their economy is contracting slightly, as everybody's is. No one's going to escape the recession. Everybody is having fuel increases. So the Canadian dollar is going to be affected equally, but the thing the Canadian dollar has going for it is the thing that's causing the problem is also the thing that makes it money. So it will get out of it slightly better. Same as New Zealand dollar and Australia should get out of this slightly better as well. So I'm kind of more long CAD. So therefore I should be shorter on US dollar CAD. I'm not taking anything at the moment up here, just purely because of my exposure at the moment on US dollar Swiss, which isn't massively bad. But I'm not going to get myself exposed ahead of non-farm. And obviously yesterday, when this entry was yesterday, I wasn't around. So, because we were, I thought we were extended yesterday on the 4 hour. Yeah. So yes, a 4 hour, we were extended yesterday. So this was a short opportunity. But I wasn't here. So that would have been a good one, but I wouldn't have taken this one anyway myself, just because I'm not going to put double exposure on ahead of non-farm, because you're flipping a coin with non-farm payroll. Could go either way, so and often does go both ways. But yeah, I like this in both directions. So we didn't quite get up to that resistance. So where we got to yesterday and this level here, I think there's a bit of room to come and retest this level up at ADR today. So it literally, you can flip a coin on this one, so it's whether or not you want to take that risk. We are very extended on the 4 hour, so if you do take it short and non-farm decides to pump it a little bit, you're going to be able to scale in very quickly. And non-farm spikes, if they don't completely retrace the same day, usually within a couple of days we're back down to where we started. Like this sort of movement, we're coming back into the propulsion gap. So if you got in short here and it went long, you can get in again up there, and very highly likely you'll get an exit in it. New Zealand dollar, US dollar, we're coming down to the lows now. Again, I'm not sure on the US dollar. New Zealand dollar, if you look at this one, obviously from a trend perspective, it's a short. It's a massive short. I like double bottom bounces the first time. I missed it yesterday because I wasn't around. But it's retested it, taken out the lows, and we've had a reversal alert put in. So we hit the bottom, came off of it, came back down, took that liquidity there. Everybody went long in Asia, has been liquidated. So potentially this looks like a really good place to start a long position from. Again, any other day, non-farm payroll day, you are literally gambling by going long on this, because it could go either way. But it's a good gamble, yeah? Your job is to put risk on the table. This could fly today if the US dollar tanks. And this has got a good reason to. There's, all the liquidity's gone. So looks like a lovely long opportunity. But again, your counter trend, massive counter trend. I'd much rather be shorting it up here than I would be longing a double bottom. Longing a double bottom with a stop loss, no problem at all. Because if it's either, it's a double bottom long, there's a reason for this trade. You're thinking it's going to bounce because all the liquidity that is sitting down here, all the limit orders are being executed and the market's taking it back up. So your stop goes there. No problem with that as a trade at all. It's a good trade. If it doesn't work, get stopped out on it. But don't try and build a position from here, because if you're wrong and we break this double bottom, it's a lookout below and you're on the wrong side of the trend, with a potential stopping point 580 pips away. I can't even calculate that. 12, 13 ADR. Not interested, really. Use a stop if you want. Lovely double bottom opportunity. The reversal alert, say, it's just happened this morning. Hourly, you're just about to get one, potentially. So you've got a nice 50 pip. Yeah, nice looking long opportunity, but again, counter trend. New Zealand dollar yen, all the yen pairs. I'll whiz through all the yen pairs at once because I'm still none the wiser. I was looking for hints for anything happening on the yen. I'm waiting and expecting there's to be a red news in here on the yen, and we're not getting it at the minute. All they've done is basically say they're going to continue their purchasing plan, which is basically devaluing the yen. So business as usual with the yen. It's weak, so you should be looking for long opportunities on everything against the yen at the moment. This one's a complete sideways mess. You can't even pick a range on it. I mean, this is kind of range high, then it wasn't. This was kind of range low, then it wasn't. This is your current range low, and somewhere around here is your range high. So where'd you get in? It's just a mess at the moment. Reverse alert after reverse alert means we're sideways. Moving averages sideways. Everything's sideways on it. So I don't really like it at all. Bias would be long. So I mean, you're not going to get an extension. You'd be lucky to get an extension on the hourly on it, I think. I mean, there hasn't been an opportunity on this for weeks. And that one, if you'd have taken it, you'd have got in somewhere around there probably on M15 or M5. Look at what you've had. You know, you would have got in and you'd be in. You probably would have added a second position down there. It's just a horrible pair. Just not interested. We're going to whisk through all the other yens at the same time. Pound yen. Pound is weak. The yen is weak. Again, mess. Total mess. No idea where that's going. Euro yen. Euro yen is pushing. But Euro yen, you know, this is the thing. This is why you need to be aware of fundamentals. This is the one I've been saying for weeks and weeks and weeks, is the least likely long for me. This is the only euro I would ever consider longing because it's massively weak on the yen. And it's been the weakest. It's the one that's been battered down by the yen the most. The yen's actually managed to get on top of it and push it all the way back down here below the 72. But now, obviously, the euro is having a little bit of a power up based on the rates. So it's the one that's actually worked out. But all we're doing is returning back to the mean of the high and the low. So right now, you are sitting in the middle. Next week, we're going to find out what the market thinks of the euro rate announcement. This thing could, well, come flying down or go through the roof. But as long as nothing happens on the yen, you're taking a trade in the middle of a range, which is never a good place to take a trade. So again, no use taking it there. The entry was down here somewhere or down here somewhere. I took the Swissy version of it down here, as I said. I preferred the Swissy over the euro because the Swissy is fundamentally strong. Speaking of the Swissy, there's the Swissy, and that's the one I took. So again, we're coming up into a double top. Likelihood is that will probably break. We may well get a third tap, but the fourth time we go through it will be a good one. So again, we'll see some manipulation on the Swiss franc next week on the euro rate announcement. Until then, it's a long. I haven't had an opportunity to get in, so I haven't got in. That's where I got in. But yeah, it's a long. Aussie yen, same thing. Bit of a sideways mess. A little bit similar to the New Zealand. Bit of a sideways mess. The Aussie's been a little bit stronger, always is, than the New Zealand dollar. Looking for long opportunities, and again, not really had anything to look at on it. Hourly, you've had one pullback, I think, on the hourly. Yeah, there. So it's just no opportunities at the minute on that one either. So nothing on the yens. All very confusing. New Zealand dollar Swiss is a lovely short. Based on the rate announcement, still looking for Swiss franc strength. We looked like we were getting a bit of it off the back of the news yesterday morning. It didn't hold. So I'm looking for short opportunities on this. Hourly or 4 hourly extensions. But again, we are very choppy, very sideways. Didn't get one there, didn't get one there. That was the last one. So it's just nothing on the New Zealand dollar Swiss. Very sideways at the minute. New Zealand dollar CAD. I get the feeling next week the market's going to wake up. We're entering into September. It tends to volatility and volume tends to pick up a little bit, and we've got all these rate announcements coming out over the next week, which is going to really give the market a bit of a kick, I think. So I think this week we just got to sort of sit it out. New Zealand dollar CAD is a short, liking the short based on Canadian dollar strength mainly, and obviously previous price action. Looking for short opportunities on it. Not really getting many pullbacks, and it's moving very quick when it does. New Zealand dollars had a very weak morning this morning across the board. We had big drops down. That seems to be pulling back a little bit now. So, but yeah, no real opportunities on that one either at the minute. But I would be looking for short opportunities, hourlies. You know, nothing. We've had nothing. That was your entries, and couldn't get back in again. And it has been pretty sideways. So pound US dollar. So this is the long we were looking at, this double bottom bounce. Is it? No, that's not a double bottom bounce. What were we looking at the this one? It's extended on 4 hours, isn't it? Yeah. Okay. Yeah, so I want that. Long in it, you counter trend. Much rather be short on this. Just trying to find an opportunity to get in short at the moment, as I say. Waiting for the Fed. I'm just the Fed. If they start to talk bearish after bearish after bearish after bearish, I've got a feeling we may well see the pound start to pull up. But the pound is incredibly weak. So at best, I think you probably go into a range on pound US dollar, in which case then I would still much rather be looking for short opportunities on it. It's very weak at the moment. We've got a new Prime Minister coming in next week, and there's going to be talk of getting on top of the rate, the fuel crisis, etc. There's not really a lot you can do without getting the bank into debt and the country into more debt. The more you sort of help out your population by paying for stuff and taking money from one pot and putting it into another pot, it just usually gets you more and more into debt. So the way things are going on the pound, I can't see it powering up in the near future. So depends really here what happens with the US dollar. At the moment, I'd be more bullish US than I am pound, so I'm looking for shorts. Can't get in. Pound New Zealand. There was an opportunity on pound New Zealand for a short. I was back there. That was the short up there. This thing's been sideways for a long time, for weeks now. So again, you know, it's just no real opportunity, no movement. We're not getting that oscillation, that profit taking that we're used to. So shorts on it. Short opportunity this morning on that. If you took it, that's what we looked at, wasn't it? Was it or wasn't it an ADR? Depends on your broker and how much they manipulated the overnight spreads. But yeah, like it short. If you get a retest this morning of that M15 reversal alert, that might be a nice entry short. Has retested it already, really, isn't it? So, and it's just breaking below the low again. So you kind of missed 50 pips of the move. You missed half an ADR on it, so it's a bit late. Pound yen covered. Pound Swiss short. Still short. Just short. Can't get in. Pound's too weak. No opportunities whatsoever. We've had an opportunity on the hourly, which played out beautifully back here. Again, you know, just there's so many pairs I keep looking at, and I'm just like feel like a broken record at the minute. We just sideways, and yes, all these ranges, you've got loads of opportunity if you want to. to get in all these highs, yeah, and get in all these lows and potentially make money on all these ranges. But at one point your range is going to break. When your range breaks, you want to be in the direction of the long-term trend. So I'm only ever looking for longs, and it's just not getting extended enough. This movement is not enough for me to warrant wanting to get into them. But on low time frames, you know, there's loads of opportunities to get in short when you see bearish price action reversal alerts. But, you know, it's just not enough. It's such a slow, horrible, you know, you could be stuck in that now for ages, sideways. Worth it. Pound CAD is a short against the Canadian dollar. Again, no opportunities to get in at the moment. Just literally been grinding down. So could have taken any of these. This is where your trend lines, you know, stick a trend line on it back there, you'd have to do it there. You'd have had a trend line maybe there. You'd have had a trend line potentially put there. That would have failed. Then you could do that. That wouldn't work. So then you'd have to, you know, just don't work. They work as much as they fail, same as everything else. But yeah, shorts, looking for short opportunities on it. No extensions anywhere. Pound odds, same thing. That was the trade. Haven't managed to get in again. So looking for some kind of pullback on it. It's not even flagging. You know, we've just gone straight into an accumulation. So again, break of the lows will probably work. But again, you know, that's not me as a trader. I'm not a breakout trader. I'm waiting for pullback shorts on it. Euro US dollar, same thing. So the Euro US dollar is an interesting one. The Euro's been pushing quite hard, as we'll see in a minute, across everything except the US dollar being held down. So I'm not convinced by the power of this euro move. I think this is just the market factoring in on all these other pairs, the rate increase. If the rate increase next week is a lot bigger than expected, yes, I think we may see some power in the euro. But what I'm anticipating happening next week is that rate announcement coming out. Maybe a bit of a spike for a day or two, and then the euro coming back down again when the market realizes that even that is not going to get on top of inflation. So with the US dollar, again, it's really going to come down to what the Fed decides to do, what comes out of monetary policy, what the next FOMC is, as to whether or not that powers up. But at the moment, it's fairly neutral. Even a fairly neutral US dollar will smash a weak euro. So I'm still going to remain short on this at the moment. Next week, we've obviously got the Canadian rate coming in, and then we've got the euro rate on Thursday. After that, we've got Powell speaking after the ECB press conference. So this here is Powell's opportunity to really either bolster the US dollar and power it up, but that will be based on what happens with the rates on the euro. So next Thursday is a real big day, because we've been promised 0.5. If you look at the rates we've had on the euro, yeah, we've been flat for forever. They said they were going to creep it up, and they did more. Yeah, that didn't have any impact. The euro carried on coming down. So now they're saying we're going to go with a 0.5, yet there is talk of them going up to anything up to 1.5, which is a massive jump. So if this comes out at 0.5 next week, that's going to be bearish euro. If it comes out at 0.75, I think after the movement we've had on the euro, that is going to be bearish euro. Anything above 1%, I think the market's going to turn around and go, actually, right, they seem to be doing something about this. But then you're going to have Powell coming out and giving his forecast on the impact of that. And that could easily turn everything around again. So it's a really big day next week, and you've got to be very careful. I'm trying really hard to get on top of my euros, which is why I've closed the euro CAD down. on the EA. I just want one exposure on the euro at the moment. I get the feeling they're not going to go more than 0.75 on this. They may go up to 1, but I don't think they will. And I don't think that'll be enough. And I think the euro is going to weaken still. So, but we will see. We will see. But then after that, when's the next? 15th. It's the pound rate. We've got no FOMC. When's FOMC? The week after. So week after is FOMC. After the euro, we've got the pound, and after the pound, we've got the US dollar. So this month is going to be a real critical one, I think, because the market's going to want to see everybody getting ahead of these rates, and I just don't think they're going to be able to do enough. They've got the balls, I don't think, enough to do that at the moment, put the interest rates up that much. So, cut a long story short, which was a really long story, but that's my reasoning behind it. I'm looking for shorts still. So if we do get a pump up here on non-farm payroll, you could get a good short in there, and I think you've got plenty of time to get a good short in before we get the rate announcement. Euro New Zealand, so this is a good example, yeah. So this is what we've had since all the talk of the rates, you know, and across the board. Yeah, the euro's been pumping. Euro's been pumping hard against everything. Look, everything. It's had a really good run. And then compare that to the US dollar. Nah, we're not letting you go. Parity. Not letting it. We don't want to go back. So you got that strength at the moment in the US dollar holding it down. All these other currencies have had weak pushes, and you know they've just been up and down a lot. But the US dollar hasn't. And that just kind of gives you an indication that potentially we're not going to see that strength in the euro continuing. So hence me having these shorts on and being happy-ish with them at the moment. So euro CAD I'm out of. I'm just covering my back, so I don't want to get into any more euro exposure, just, you know, 3 days ahead, 4 days ahead of the rate announcement, but I still like it as a short. This area here, this kind of balance area here, is where we tap back up into. Yeah, if you think market structure continuation long term, this is where we will start to see some people starting to step back in again to enter shorts. So nicely extended with a double top on the RSI. Got nice divergence starting to form there. The selling pressure starting to come through. The pullbacks are pretty normal, pretty standard. So it's a normal market structure before we get that movement, which ends it, and then we get that cascade effect. You know, climbing up the stairs, falling down the elevator shaft. Shaft could well be this afternoon. So yeah, Euro New Zealand, still like that as a short at the moment, based on fundamentals. It obviously hasn't played out based on technicals. I was looking for a push back up into this area here, into this balance. So you can see where I've got in, and I'm looking basically for this area to hold, and it hasn't. So obviously a little bit more extended than I was looking for. Looking for it to come back down out of there. Euro yen, covered that one. Euro pound. So again, week against a week. Temporarily strong, smashing the euro. We're smashing the pound, obviously. ADR is going up on it because obviously we've got this big spike. But yeah, I mean, you're just not. You're not going to get anything happen on this pair until one of them fundamentally has something happen to it. So pound, nothing foreseeable. Euro, potentially some strength. We've had the strength off the back of the rate rumours. Therefore, it's done that. So I'm not interested in getting into this one because of the ADR on it. I keep saying it's just such a tiny ADR. But we're massively extended now. We were massively extended before the reversal started yesterday on the euro. So you've got an opportunity. Does anybody get into? I don't know if anybody got into this one as a short, but your initial entry would have been somewhere around that high. So you've been squeezed for a good 3 days on this. But difficult to get out of. Euro Swiss short again. Like this one as a short. This is exactly where I want it to be. Swiss franc strength based off of their rate increase. The problem with this one is that the euro and the Swiss move together, so you tend to get whoever is the stronger of the two. This works the same as the Aussie New Zealand. When you got two and the Aussie and the US dollar CAD, when you've got two that are very close trading partners in the same area, they tend to move a lot sideways until one of them gets some additional strength or one of them gets some additional weakness, and then you just get a trend start which doesn't stop. So this is the sign that we may be having that starting to reverse. This to me looks like the market factoring in a 0.5 rate increase before a continuation drop, because 0.5 isn't going to be enough to get on top of inflation. So I still like this short up there. Again, I'm not getting into any more euro ahead of the rate announcement, just in case. I've got my Euro New Zealand short on, but I like the Swiss. The Swiss is strong. Obviously against the euro with this rate rumor, you know, it's never gonna, nothing's ever gonna stand up against it apart from the US dollar. So Euro CAD, same thing. Canadian dollar strong. We've got this nice area of resistance potentially coming up here as well, which is still way above the highs there. So we've had new lower highs put in on it. Canadian dollar just not been as strong as usual, but yeah, lovely short opportunity was up there. Which is, you know, that's the one I took. So, out. Works out beautifully. Euro odd. So again, short opportunities at the moment. Had one there, already would have been out of it if you'd have taken it, but not getting into any more ahead of the euro announcement, but like it short still. Just not really. It got extended a couple of times, you can see from here. So if you'd have got into it on that one, you would have been adding somewhat of up here and then adding up here this high. So you'll still be in this one at the minute, but the 4-hour extension on it we've got at the moment. You had that one obviously there, which played out beautifully, but the 4-hour extension only just happened on this one. Actually, it happened just there, didn't it? So you had an exit on it yesterday if you're trading the 4-hour, but like it short still. But again, you know, just use your head really. Do you want to be getting exposure on the euro ahead of the rate announcement next week, and do you want to be getting too much of it? Make your decision. I like it short, but I've already got exposure on this one because I've got the Euro New Zealand, which is the same pair. Swiss yen covered, CAD yen all the same. Longs I'm looking for. No hits on any of these. CAD Swiss mess sideways. Not interested in this at the moment. Look at the ADR on this now, 56. It's not moving. So yeah, nothing of interest whatsoever. Aussie US, again looking for shorts on this one, short opportunities. We had some up here, and hourly we've had one last week. Was that last week? Last Thursday. But yeah, not really any opportunities at the moment on this. I like the Aussie short against the US dollar. I don't really want to long it. So we are about to get an extension possibly to the downside. But I'd rather wait for those short opportunities on it. I'm still short everything against the US dollar. I still think the US dollar's got some legs. The Fed doesn't like to weaken it. I think we're probably going to get some movement. But obviously we've got a couple of weeks to wait for FOMC and the rate announcement. So I think that's probably when it's going to happen. But I'll be looking for short opportunities and everything up until then. So this week and next week, I'd like, you know, I'll take any shorts I can find against the US dollar, but not really anything coming up at the moment. The only thing I've got long, obviously, short on the US dollar is US dollar Swiss based on the Swiss franc strength. Aussie New Zealand up, longs. Been along for a long time. Been longing this to death. Still like to long it to death. Next opportunity, I will get in long. Aussie yen covered, Aussie Swiss short. Again, this one's a sideways mess. Just nothing. You can take every short against it, but you just, not getting much out of it. So it's just not worth it at the moment. No alerts on it. Hourly, just about. This is the thing. We're getting loads of these just abouts. We're getting these 70s light up on the RSI dash. Literally light up for 1 or 2 candles. You miss it. That's all we're getting at the minute. I'm not getting any decent extensions above 80 on anything. It's just not good at the minute. Just staying in what I'm staying in, which is what seems to be working, which is oil and DAX at the minute. Aussie dollar CAD sideways, looking for shorts. The short opportunity played out yesterday, but there was no extensions anywhere. So again, nothing to get into. Just a bit flat at the moment. A bit flat. Very hard to make any money out of anything. What's happening with oil? A little bit of a pullback on oil. Still going though. And US dollar Swiss still coming down. That's it really for today. That's everything covered. Nothing much out there. I really can't find much at the minute. This is the testing time with position trading, when there's very little movement going on and it's all very range bound and all very slow. It's very hard to get positions. But when those positions are working, they're working incredibly well. And it's all trend based at the moment. So everything in line with trend as far as possible. He says, bringing up a chart, which is a clear uptrend starting, being short on it. But to be fair, when I got in, it was. Yeah. But this is the problem with trading, isn't it? All trends come to an end. So at some point, you're going to be wrong. You've got to manage the wrong. Let the right just move into your bank. Right. So that's it. I'll be in the live room all day. I will put we'll do another session at 20 past. Anybody that's around, I'll put a note in the Telegram group. We'll come back on at 20 past 1 this afternoon, and we will have a look at non-farm payroll, watch it unfold, and see if we get any movement. It won't be a long one, only be sort of 15 minutes or so. Well, it depends. If it goes absolutely crazy, we might be on for longer, but it'd be nice to sit there and trade it. I might try some opportunities on it. I'll see how it plays out. I like to watch it and see what happens. And if I see something that is this looks like a really good looking short, I'll take it and trade it with a stop. Yeah, it's hit and miss non-farm. So we'll see what happens with it. But we'll watch it this afternoon if you're around 1:30, and we'll see what we get. We have negative numbers there, and that quite often is a precursor to what we're going to get here. Not always the case, and in fact recently it's actually been a bit less similar. We've had lots of positives on the non-farm payroll, and we had 1 neutral, 2 negatives, so they've gone kind of out of whack a little bit of late, but we'll see. What do you think non-farm payroll will do to oil? Don't know. As I say, this is my first time trading oil through a non-farm payroll, so I'm unsure. Let's have a quick look. This would be an interesting. So we are July. Do I go that far? I do. So it's the 8th of July. Last NFP. Nothing. No, that's non-farm payroll. 8th of July. We got a spike. Would have been at 130, which would be to 330, 1330. So it's in here. So we had a move 34 pips. Yeah, so just under an 80, well, ADR is 42 at the moment. I don't know what it was then, but just under an ADR's worth of movement down and up. But that's, you know, this is typical non-farm market. And then try and find it on M15. This is always fun. Yeah, well, that's not bad. So 330, there we go. So that's non-farm. There. But then look, you know, this is typical non-farm. It's not it's a manipulation event. It's a grab everybody's liquidity event, which is why we often see that movement, which is them taking all the liquidity at the highs, all the liquidity at the lows, and returning to origin with everybody's money, and then they'll just do what they want from there. They've taken all your money, they've made all the money. You know, every single buy you've got, they sell it, they make money on the opposite direction. It's what the banks do, and this is what non-farm payroll is all about: manipulation. So yeah, it does move. As I say, that was a 35 pip move. So we'll see. Let's see what the US dollar Swiss did on the 8th of July as well. Oh, hold on. Let's go back to Harley first. Find it quicker. Eleventh. So that was non-farm on. So it's positive. So oil goes the same way as the US dollar. There we go. So we had 65 off of that, which is just under an ADR. Again, you know, look, it's all it is. Return. It's very rare non-farm you will see that, because non-farm payroll is not any kind of leading indicator as to what is going to happen with monetary policy. It's a reactionary. It's what monetary policies change. What's it done to people's wages? Yeah, what's inflation done to people's wages? It's a monitor of, because that happened, this has happened. It's not a this has happened, so we're going to change that. It's not a leading indicator. It's a reactionary indicator. So you tend to get the spike and the retracement, which is why I say they're fantastic fade opportunities. Non-farm payroll goes 150 ADR. Hit that sell button fast. So it looks like oil goes the same way as the US dollar, but we will see this afternoon even. Yeah, so 1:30 Themba UK time. No, it's not 1:30 US. No, it's 9:30 US. Sorry, no, it's 8:30 US. This is UK time. 1:30 p.m. UK time is 8:30 a.m. in America. They're released an hour before the stock exchange open. So it doesn't impact the stock exchange, basically. Nothing to do with it. So. Okay, so I'll be back on at 1:20, and then we'll watch non-farm explode one way or the other. I'm keeping my eye on these. I'm going to monitor oil closely this morning. It seems to be moving fairly nicely at the moment in London. If we can get new highs made here, I think we've got half a chance of actually getting a move up to yesterday's high, in which case I'll probably bank that. And just stick that in the bank and do a little drawdown control, either on Euro New Zealand or on US dollar Swiss, but I will see. That's the wrong one, sorry. On Euro New Zealand, more likely, I think, but we'll see what happens with that. Yeah, so in Forex Factory, if you want to see your time zone, if you come up to the clock at the top here, yeah, and just click on that, it will auto detect your time zone. If not, you can select it and then save the settings. Next time you go back to the calendar, it will be your time, so you can see what happens at your time. So you never even, if you want to know what non-farm payroll is in your time, change the clock to your time. Which is why I like Forex Factory, because it's configurable, more configurable. And obviously Financial Juice over here. Where's non-farm payroll? Oh yes, because I'm logged in. Yeah, so I'm logged in. I've got an account, so this is my time as well. There's just a filter there. I didn't realise you could filter. Oh, that's handy. Let's see what their mediums are. Employment and stuff. Yeah, so they've got more news on their mediums of Financial Juice. Interesting. Consumers see inflation in 3 years at 3%. You'll be lucky. 3%. It's going to be way higher than that. But yeah, that's what consumers see. Consumers obviously have no idea what they're talking about. That's what they want to see. They're going to get something completely different. Right, okay, I'll leave it there. Be back, as I say, at 1:20 this afternoon, UK time, and we'll trade non-farm. So basically 10 minutes before non-farm payroll. All right. So hopefully you have a good morning. I'll post in the Telegram group anything I'm taking profit on. You're going to have different positions to me, so it doesn't really matter. But just basically, if I'm taking profit, it's because I think the market's weakening. Not that I'm right or wrong. I'm doing it because that's what I want to do with my positions. So I will post anything that I'm changing. There's nothing new I want to get exposed on at the moment at all. Because nothing else is really moving enough for me to want to get in. So I'm unlikely to take any new positions today. And then next week, I will probably have a fairly flat week as well, because I'm not sure about what's going to happen with the rates. So if I see any good Aussies or New Zealands, I shall be jumping on board. Or any good pound as well, but nothing much else at the moment. So, and I'll let you know what happens with the my Forex funds. I've got 5% to hit on this. I'm basically banking as much as I can on this to try and get ahead of the game. I've got everything set to bank automatically at $300. So in effect, I need 8 trades, 8 positions to complete to hit target, and then I'm done. Then this is going to be funded, hopefully. So we'll see. Right, I'll see you guys later if you're able to make it. If not, have a good weekend. I'll be back on Monday at 7:50 usual time, and hopefully get some profit this afternoon. Anything you need, come in the Telegram group. I'll be there. All right, I'll see you this afternoon.